Good morning, good afternoon, good evening, everyone. And Perry, excited to get in this chat with you. It's been a journey working with many product leaders, and definitely you're one of the, having a lot of experience in, running product organizations and connecting strategy to day-to-day product teams. So it's all too familiar that our teams are facing the challenges of either, even though there's a goal alignment, there's no strategic alignment, or there's no guidance at all with all the things are running around. So our chat today will be mostly open-ended, and we'll focus on a couple of topics that are common to strategic planning. I think many of you already kind of shared you're doing this now, or you're thinking about doing this. So Perry and you and I just kind of chat about a couple of things that, in your experience in various size companies, how is it done and what is done. We just have a chat around it. Yeah.
Absolutely. Thanks, Becky. And thanks for the great introduction, Baji. I appreciate it. I'm looking forward to talking with you today, Becky.
So I think, we kind of chatted a little bit about how strategic planning, in some ways, people have a kind of not misunderstanding. I always feel like it's a big company thing, how it's done different, how we do it today, is the finance thing. Would love to hear some of your thoughts on, your experience in various size companies, and do you see similarity? Do you see differences?
Yeah, I think I've had the pleasure and excitement of working with extremely large companies like Barclays Capital and American Express, as well as small private equity and VC-backed companies of somewhere between $50 and $100 million in revenue. And at the highest level, there's some challenges that exist, and it's this misalignment of allocation of resources to core objectives, business objectives that the leadership is trying to achieve. And when we think of strategic planning, what I'm pushing within my organizations, and what we're starting to do at AbacusNext, is really focus around the OKRs and objectives, key results of the business, and aligning the allocation of the organization to what those OKRs consist of. And that's something that is a challenge, and is something that is a huge focus of me as a product leader. And what's, since starting to work with Dragonboat is a big piece of the conversations that you and I have. And I'm excited about leveraging Dragonboat to really push that strategic planning capability through the organizations.
Yeah, it's very interesting. You brought up two things that I also personally experienced. I'm sure you have war stories too, so would love to hear as well. When I first get exposed to strategic planning, was just a CFO-led finance activity. So they're saying these are the revenue we have to grow, these are the initiatives we're going to have, and then mostly just around the budget and some of the big initiatives. And it was really kind of held in a strategic offsite or something very unknown to the rest of the company, and then something magically came out, and then the team started working. It feels there's a big disconnect on sort of the strategic goals and how things came out, and then by it goes to the team. Even though we have all the budget, everyone's just scrambling, trying to hire people and trying to get resources, and we weren't able to really move the needle on things we want to do, because people are not hired in 3 to 6 months. By the time half the year is already gone, so we couldn't deliver all the initiative that we were promised or planned in the strategic planning process. So this is something that we had to change. One example was at PayPal, that we had to change it to something where instead of doing just the budget exercise, we actually had to look at an initiative. We had to look at the people, but look at how the people would organize around to support these initiatives. So would love to hear from you as well, Perry. Did you see some of the changes, especially for product companies, that are slightly different from a more traditional a business type of strategic planning?
Yeah, Becky, thank you. Let me give you kind of two examples. One, what I'm going through right now with AbacusNext, as you had mentioned, we're roughly $100 million private equity backed company. And historically, the organization was pushed at, just as you described, from the CFO on down, and there was a disconnect for one reason or another between what those numbers were and how sales viewed their quotas and their ability to drive revenue, which was disconnected from, say, how product management historically had viewed the development efforts that we're going through. And now we're in the process of going through an alignment around what are our business goals and objectives from the top to hit a particular revenue number. What are the OKRs? What are the objectives and key results that we're trying to obtain from initiatives and projects? And those projects then tie to specific features that are being developed and an allocation. So we're able to build that process not only from the top down, but also from the bottom up to see exactly where we're spending our resources and what are we delivering and why are we delivering. It's more of an outcome-based approach rather than, or objectives and outcomes rather than just something that we're going to be working on, and really focused around those outcomes of the business. So now the revenue teams and the development teams need to get alignment as we think about the next phase of what we're trying to develop. And that development is directly tied to the projects, initiatives, and goals for the organization. So it's something that I'm really excited about. It's something that I've pushed throughout all my organizations. On the flip side of that, I've seen in my last larger organization where different business lines actually operated slightly differently. And we saw a big disconnect between the business lines that I ran working with the revenue teams to generate outcome-based approaches to the development focused around what were the key objectives for that year and for over the next 3-year period. And we achieved those objectives because everyone was pulling in the same direction. Whereas another business line, which was very much a top-down CFO-driven exercise, didn't achieve the business objectives because that business unit was not aligned around how to achieve the revenue targets, what was being developed. That lack of alignment eventually within that year was identified as a key reason why the core business unit objectives were not met. And so thinking about it, not only from a top down, but also a bottoms up, looking at the resource allocation, looking at the strategies and the goals that we're trying to achieve makes a big difference to the eventual outcomes.
That is a very, very interesting and telling story. And Perry, I think the example you have shared definitely it resonated a lot of the some of the changes or challenges I personally also experienced in some of the company I worked at. I'm not going to name names, but quite often when there's a thinking of a business versus a product or product/R&D, then there's generally a misalignment. Because especially in the technology industry where product is business, or we sell, or we market, or we service, or the product itself. So, and then when the traditional sort of just the revenue driven top down, and you guys figure out everything else is going on, there's a big misalignment. So one of the company I joined, they never did strategic planning with our R&D team or product team. So that was the first time we went through that exercise. And what's interesting is I get everyone sitting in a room. So obviously, CFOs and executive team committed to the board a certain revenue target. So before we started the strategic planning process, we actually just asked everyone, kind of like a piece of paper, if you will, saying, these are the revenue numbers. What do you want to do in your function? So we just did a quiet exercise before we kind of flip our paper open, and then realized that everyone has different ideas, right? So there's go up market, there's a partnership, there's a white label, there's go freemium. So every function you can imagine, right? Sales want to go up market, marketing gonna go freemium, partnership want to do white label, and product was have a different, building a new whatever the tech-driven AI modeling, and everyone's different. So that was eye-opening for the organization to say, well, if we were to go that, nobody's going to go everywhere because everyone's going to go to the product team, asked to build features, and they're all just different. They don't even tell a whole story. So the hardest part was actually for us to all agree on, like, how do we double our revenue? Should it be upmarket? should be a new product, should be white label. And that was like one of the painful, but it's a very productive session. And then we end up deciding to say, hey, okay, we're going to spend 60% of our resources and focus on building up market, because that is emerging. That's not a lot of competition, and we're well positioned towards that. That's also extension of our core. We're going to spend 20% of our resources on white labeling. We're not going to do freemiums against the top our core strategic initiatives, and then we're going to spend 20% of our resources focusing on product innovation, tech debt reduction, because that would have to support up market. So that conversation around just understanding everyone's perspective really align on how we're going to achieve that. It was like, I would say it was probably the most important part for product and the entire business aligned.
I think that one of the things that you hit on that really resonates for me in the conversations from a C-suite executive perspective is that resource allocation, thinking about what is being innovative, what is being core to operation, and what is being iterative. And as we think about going into new markets, what percent of our business and our investment dollars should be going to which key effort and which key theme that we're trying to achieve, and just getting alignment around that from an executive perspective, understanding where we're trying to go, and understanding how do we keep the lights on, and what percentage of our effort is going just to keep the lights on. And it's great to have this theoretical model of 20-60-20. Where are we at today? And this is a conversation that I'm having with the companies that I've worked at in the past. And actually, I'm advising some companies in terms of, okay, let's say it's a 20-60-20 split, 20 going to innovation, 60 going to an iterative development process, and 20% just to keep the lights on, dealing with individual customer feedback. Okay, if that's the model, even just getting to understanding of where we're spending our dollars today then allows us to make adjustments. And the adjustments aren't going to happen immediately. It could be, especially if a company has been around for 5+ years, they're going to have a misallocation of not that target 20% to keep the lights on, but probably more like 30, 40, or 50%. Okay, let's recognize that as an organization, as a leadership team. How do we start changing the trajectory to get it into more of our target allocation? And it's that executive business conversation. You need to have your targets, and you need to have an understanding of exactly where you're at today, really to have that good strategic alignment and strategic planning conversation.
Yeah, I think you're spot on. It's interesting that one of the things that we did at PayPal earlier days was we actually split at the time. Well, I think now it's a common practice now, but back in the days, what we were trying to do is to understand the cost of development, the cost time, right? And we want to understand how much to keep the lights on and how much is new feature development, so that as the years go on, there's a proportion of the effort will still contribute to the previous features and upgrade and so on. The numbers was staggering. It's way higher than 20%. Let's say that, right? And that's really give us a couple of insights on how much we should plan for allocation for if we build a new product. That means like this year, this quarter, that means you will have a pretty higher need for keeping this product as a relatively, either product features or a key capability improvement. That will need more ongoing. If you don't, then your initial investment may not, introduce the real benefit you want, right? So that, one of the, we know customer has this death by 1,000 paper cuts. Great, the little thing, but then you have too many of these, you would just people just eventually abandon your product. But at the same time, if you don't plan bigger initiatives, don't plan bigger changes, then the product will just incremental in a way ultimately going to be replaced by something else better, newer, solving the customer problem differently. So having that understanding, so that and adjusting where are we going to invest in, it's so important. And one of the interesting thing where I heard is that, hey, strategic planning is the executive decision. Why affect me? How do I even need to worry about it? I'm a product manager. It doesn't matter to me, right? So, but the thing is, too, one is if your leadership team, executive team, does not create that kind of strategic clarity and alignment, the team will never be successful. They just don't have the direction, they don't have the resource they need to do what they need to do, right? The second part is really interesting is I also experienced, and I'll put this here, is that there is a change from an annual, like used to be 3 year, 1 year. Now we do annual, we're literally doing quarterly strategic planning now. So do you see, how do you see this has changed in your experience, and how's your rest of the team interact with the strategic planning process?
Yeah, I mean, I think that's a good question. I think that I've seen it, and you kind of articulate it here in terms of the executive level, the directors and managers in the individual teams. Something that I've really encouraged my product teams is to work on a monthly and a quarterly basis from a product core team to say, when you look at what we want to be building over the next month, over the next few quarters, let's meet regularly so we could steer the product, the steering committee on an ongoing basis, so we always stay aligned. I literally just got off the phone with before joining here with the head of sales in the UK, and talking about how he's now aligned with the product manager with product in the UK. And I said, that's great that you're aligned. However, if you don't continue to work it into your muscle memory, if you don't continuously get into this iterative process with the revenue side of the team as well as the product management team, you could get misaligned pretty quickly. So having those monthly and quarterly product steering committees are critical. And that needs to feed into this ongoing executive on an annual basis, something where we are summarizing things to look at what are the big strategic bets that we're making, what is the innovation that we're trying to drive towards your overarching strategic goals. It's something that we're doing here at AbacusNext, and it's something I'm really excited about, and it's something that I've done in my past, but especially within $100 million company that wants to go to $200 and $300 million, to have that alignment throughout the organization and make sure that there are no pet projects, or those pet projects are identified as those innovative areas that we all agree are areas to invest in. The strategic planning helps us get there.
Right, and I think that it's a very interesting. And a lot of companies, it seems to think that strategic planning is at times, when not done well, affecting innovation, affecting sort of new ideas. And I would say I really put a really emphasis on when not done well versus when it's done well, because I think in many, Perry, you mentioned earlier, it's a top down and bottoms up. When we have one of the key things for strategic planning is really to say, what are the goals and focus, and also align on how we're going to go about achieving these goals. How are we going to go about achieving these goals does not have to come from executive, and it's quite often coming from the team. So, the ones you mentioned, Perry, is really to say, hey, when we have this product connection or steering session where we have the team and the leadership coming together, we actually can talk about business challenges, market evolutions, and competition and customers. And that would just further sort of either confirm or for us need to adjust where we're going, how we're going to go there. And that's really a good time to basically align and guide the team, move the direction we need to go to. And maybe one innovation area turned out to be very successful. So the 20% allocation needs to be higher, maybe 30, 40, 50. And that's that's how new products are born. Like if you always just do incremental and improvements and optimizing and getting customer feedback, nothing wrong with the customer feedback, but customer can only see this far. You see much further what the product can do. So I think that's really interesting you mentioned that. How do you see like a new product in your experience? I'm sure the new product coming out of your existing product, how does that journey connect to, for example, the strategic plan or general product process?
Yeah, I think that's a good point. I mean, on the previous slide, you just had kind of one area that said strategies, right? And those strategies, it's what is the customer mindset? What is the customer focus? What is the competitive landscape that is going on in the marketplace? And yeah, I have 3 or 4 big competitors that I'm worried about or I want knowledge on, but it's not necessarily about those competitors. It's also about what are those 3, 4, 5 little tiny competitors that we don't necessarily look at on a day-to-day basis, but they're going to come up and eat our lunch. And making sure that we understand the competitive landscape, understand what our customers are and the customer-centric views of what we're trying to achieve is critical as we think about this allocation. The strategies from a customer, competitor, market landscaping perspective go into achieving our goals. And product managers need to facilitate, product leaders need to facilitate that within the whole organization to make sure that we tie back the resource allocation to the strategies with everyone's mindset. That customer mindset is critical. The revenue and account management functions are critical. And as we think about the new areas of our business, I do think we have the opportunity, once you understand maybe a standard allocation of 20, 60, 20, where are we at today? Maybe where we need to be, because we have legacy products and we need to overinvest in the innovation component. Let's come up with an allocation big picture wise. Maybe it should be 60%. And if it's 60%, where does the other where does that percentage come from? Are we going to leave the lights on? Are we going to stop iterating and go into maintenance mode? So it's those big conversations that the market influences us. And as leaders of organizations, it's critical that we have that mindset as we go into our strategic planning process and our quarterly product reviews.
Yeah, I think you're spot on in that, understanding the market landscape is such a critical thing. And in some ways, that strategic planning is a forcing. I mean, I'm not saying people are not thinking about it, evaluating it continuously, but there's a certain set of cadences where everyone from different functions will come in and to discuss it, so that the part that we may be having a missing piece of information approach around it, and also opportunity. So it's very interesting. One of the company I worked with before, where there was just a lot of chatter from the customer on, they always working with this department has this process that is very manual, it's very hard to do. And if there could be great to have automations and AI, some sort of modeling. And that turned out to be a potentially big opportunity. So as we start to have a customer success, as well as the sales team and the product team look at not necessarily the feature enhancement, more of saying these are the blockers for them to go after to expand existing product. They found out that whole adjacent market area could have a huge business. So now that's like the second phase of the company, have a completely new product, much bigger market than what it is today. And it's just because that when everyone coming together say, what are the challenges to grow our business? The people start to talk about challenges. All of a sudden, challenge became opportunity. Opportunity became a new product, and the strategy was born, and allocation came out, and the new product came out of the process.
Yeah, I really like that concept. But once you start looking at this through a different lens, you could then go forward actually with different models, and you could actually, from an allocation perspective, look at a new business in a very different light. Or just from a business unit perspective, maybe there's a new business unit that starts up. So you have your target allocation with a certain number of resources. You have another business unit with a different type of allocation structure. And now all of a sudden you could not only look at it through 2 different lenses, you could then look at it from a lens across both business units. And when you're under different competitive threats, that's something that I've done in my past. It was something that I did when we were at Lehman Brothers, believe it or not, / Barclays Capital. As the market was unfolding beneath us, that was really how we started segregating our businesses. As we moved from Lehman Brothers to Barclays Capital and merged the 2 companies, and the market was shifting, we looked at our business in 2 separate lenses. So as I was on the strategic planning team, that was a lot of what we were doing, and a lot of our analysis was focused around understanding the allocation, understanding what markets we wanted to play in, and where our bankers should be focused. So it wasn't a technology conversation, but it was very much a resource allocation, strategies, and OKR perspective from a business thought process.
Right. It's cool. So I think we are half into the session. Maybe we just take some audience question and then we can continue conversation from there. What do you think?
I like it.
And so Baji, could you help us to sort of triage a little bit of the Q&A?
Yeah, absolutely. So we've gotten a number of questions in already. For those that haven't submitted yet, you can open the Q&A in the bottom of the Zoom screen and send them through. Okay, so starting from the beginning, how big should the company be to start strategic planning?
Actually, that was a conversation that Becky and I had in a slightly different context. We were looking at the way venture capital run companies view their world, private equity companies view their world, and larger public companies view their world. But it very much resonates with the question that was asked. Every size company needs to look at it in this manner. The questions are going to be different. The market landscape and the rapid development of a particular market is going to differ. But even the smallest companies need to have this thought process in mind. You make sure that they're placing the bets in the right spot. And this slide on the screen, objectives, bets, and initiatives. As soon as you get one customer as a tiny company, you're going to have that customer making demands. What percentage of your resources should be dictated by that one customer versus where you want to go? Maybe it's aligned, and maybe it's probably not, because that one customer is going to have something different. So I think you need to continuously think about it regardless of what size you are. Just the questions are going to be different.
Yeah, I think Perry, you're spot on. And strategic planning is not a big, heavyweight process where you kind of go stop everything. It's more of a type of thinking. Well, this type of thinking, going back, what we're trying to do is always looking at what is our goal. So regardless of your one team company or 10,000 team company, you always have a small set of goals. There are a lot more goals, but you have to say these are the 3 or 5 goals. And then what is the strategy we're going to achieve those goals? There are like 100 times more strategy than you really can go with, no matter your one team company or big company. So these exercises are called strategic planning. And that, as Perry and I observed, like, this is happening to every single company, every size, not only at executive level, right? You do this bigger. If you go down to the smallest part, if you use Scrum team, your product manager with a Scrum team, you have to do that as well. What is my product goal in relation to company goals and in the product and the market and the customers I need to serve? What are the goals I'm gonna focus in my next, month or quarter? And there are all the things I could do. What are the things I'm gonna do? It's like your quote unquote productization happens, but prioritization cannot happen in a vacuum. What do you prioritize against on what? Whatever scoring is alone, it's not sufficient. Your whatever scoring system you use had to tie to where you want to go and your goals. And from there, you also say how much I'm willing, because you cannot just do one thing. You always do more than one thing, right? Bugs definitely will be there in addition to the feature. So that whole process, strategic planning, is focused on what are the goals, how are we going to go about achieve the goals, how much we're willing to allocate my resources, no matter it's one team or it's the whole company.
Becky, one of the things that you mentioned that I want to make sure that I touch on for all the people who are watching this, what I mentor my product managers to focus on is if the product manager is not looking from a strategy perspective, the product manager is not able to create the right vision, create the right incentives and motivations for the people, the engineers on their team. And the engineers are down in the code and they're focused on that features and the tasks and the stories. And a lot of times when I'm mentoring, people within my product team during skip level meetings, make sure that you're talking about those things, talking about the business objectives of why you're doing this. Otherwise, there's going to be a lack of motivation on the engineering team. And if you're not, as a product manager, spending time doing that with your engineering team, you're not doing your job right. And that goes for everyone that I mentor up through the organization. It really is important to not just play lip service, but to firmly believe it as a leader, as a product manager, as a product director, as a product owner, as a business unit leader, as a CPO, as a CEO, to be able to articulate that is critical.
Right, right.
That ties into another question that came through is, what do you see companies doing wrong during strategic planning? So Becky, you mentioned kind of prioritization in a vacuum. Perry, you mentioned connecting execution to objectives, but I kind of like this frame of work. Like, what are some pitfalls that people should avoid as they're going through this practice?
Becky, you want to take that to start?
Yeah, sure. So I think most company so there's a traditional strategic planning. It happens mostly for sort of the traditional industry. You do manufacturing, you decide your budget, how many units you're going to produce, you get your machinery. So it's very top down. You can't really after you decide, it's just execution. And in the modern world, it's different now. So the way you apply sort of manufacturing age of strategic planning to go top down with the revenue and guidance and just doing, it really has to be what's the goals we try to achieve and involve the team to be part of the process and a continuous process. So I think that's the biggest one, is to do it once and done, and that's just not going to work anymore, and you have to involve the team.
The other piece, I think that's spot on. The other piece is level setting with data. I think that a lot of times different leaders come to the table with different set of facts and different set of understanding of the data. And then you end up spending all this time within your strategic planning meeting arguing about the data. Is the data accurate? Rather than what are the business outcomes you're trying to achieve and what type of data do you have that everyone believes then supports it. So I think that it's a lot of work, but in preparation for strategic planning, in preparation for this ongoing week, month, quarter, annually process, ground yourselves in data that everyone understands and believes in is critical.
Right. 100%.
I love that. Okay, so the next question in from Katie. Have you ran any workshops with executives to align on strategic planning objectives? And if so, what were some activities which facilitated the conversations successfully and helped people align on strategic goals? Loaded question there. Perry, you want to kick it off?
Yeah, the short answer is yes. And I remember early on in my career, I was working for a company that got acquired, and we went through this big strategic planning exercise. And a lot of it was run by a consulting company. We set up very specific swim lanes. And those swim lanes were led by individual business leaders across different functions. And those, if it didn't have the executive support, it was not going to be successful. And so I've modeled really my whole career after this thought process of, look, from a strategic planning perspective, we need to have the buy-in, and something that Becky and I talked about. My organization now, I run R&D. So I could bring people to the table and say, here's what we need to achieve, and here's why we're going to achieve it. Here's what the objectives are, and set up the specific swim lanes with specific business leaders to get their buy-in. And once you have the buy-in to the leadership to push it down through their team, it makes things flow that much smoother. If you don't have the buy-in from the top, this process is extremely hard to run. But that's how you get the objectives and the outcomes that you're shooting for.
Right. Yeah, I think that having alignment and a buy-in, and also in some ways that the executive leaders to be the tiebreaker is super important. I definitely have seen strategic planning in the way where there's no tiebreaker, there's no sort of the an overarching role to orchestrate the process. What happens is it basically say, okay, you get to do X, Y, Z, I get to do A, B, C, then we call it a day, and then just go to the team to execute, obviously. And that's it's a disaster because there's no alignment on our strategy, no alignment on how we achieve these goals, but more of just saying make everyone happy, walk out of the room because we allocated resources to each individual or function versus we work collectively, cross-functionally, because almost nothing can be done by one team. So the fact if we do anything meaningful, it's going to be cross-functional, means the strategic planning is a process to bring different viewpoints, different dependencies, different needs in the place so that we can figure out how we work together. And then we work out with a general agreement on here's where we're going to go, here's the direction we're going to go to. And then we can figure out for the rest of the team, they're not just go the bridge tunnel situation where everyone has different ideas how they're going to achieve their goals. So we're, as an organization, our team, we won't.
That's spot on.
Thanks.
So you guys were talking about allocation as they relate to pet projects earlier. So here's a question related to that. How much should you allocate to pet projects or other things that come up that weren't planned?
So the way that I think about it.
Do you want to go, Perry?
Yeah, sure. There's two things I think about. Is it a pet project or is it keep the lights on and customer driven impact? I think in my mind as a mental target mental model, 20% allocation kind of to that bucket, and then understanding where you're at today and understanding where that's at. I think that's one kind of target number that I always keep in the back of my mind. But that said, the key here is to focus on where your resources are allocated. And at that point, it's not necessarily a pet project per se. You're doing it for a specific outcome, a specific business objective. Is it pure innovation, or is it for a particular customer? Then it's not so much of a pet project. It's more of achieving the outcome that you're trying to desire and targeting. And that's where I think a 20% allocation is from a target perspective. Very interesting to see where your company is at with where your current allocation.
Right. It's a really good question, Perry. I think that varies across based on the state of the business, right? If your company is growing really well, you just reach product market fit, at least for the segment of the product, you just want to make sure that you firm up the product and really moving forward, customer had a great experience that you build up from B1 to B2, B3 so that you have a complete experience. Then you spend a lot more time and resources on the core, and then you have something mostly around things like in maintenance and so on. Now, if your core product is already at the it's across the case, and it's at the growth curve, it's flattening, and that's actually too late. You need to start to think maybe V2, V3, V4, right? To say what other things and what other ways so we can, and you can call it pet projects, you can call it innovation, however you want to call it, but that seed need to be planted as your products start to gain adoption, because it takes time and you don't know how long, and you don't know success rate of the new product and features being built, right? So that really varies quite a bit in the company as they are going through different phases. Even in the same company, different product at a different stages of adoption would probably means different allocation for sure. There's one thing I want to, it's maybe it's a nomenclature. There's just things about pet project versus innovation. Because I feel like it's innovation or it's just a test and learn, it's something we want to figure out, planting seeds. I think it's totally natural and normal all the time. Sometimes the pet project has things a little bit different, right? So it's more political. It's something one person believes so strongly and nobody else believes. They try to hide it under the hood, which I think it's probably never. You shouldn't never have anything like that, because I think the organization and the world become more transparent. The more you make information available and explain to people the rationale, the better you can get supports and you can get better, insights, information. The more you want to hide it, in most cases, you shouldn't be hidden, right? And that kind of the concept of the pet project became a little bit different. So I would say, if it's an innovation, if it's investing in new opportunities, companies should almost always have some allocation to it. But if it's a pet project, it's a hidden, it's just one person really want to do it, nobody else thinking they should do it, I think it should be zero.
Fair, makes sense. Unless it's a weekend hackathon, right?
Right. And that is still not a pet project, but yeah.
Okay, switching gears a little bit. So we had somebody ask, how do you make a strategy for incorporating new products in the portfolio after a new acquisition?
Perry.
So we actually just went through an acquisition. And I think that there's many different ways to view a new product after an acquisition. I'm not sure if the question was leaning towards as you acquire a company or a product, is that considered the new product? But I definitely, one of the things that we're doing right now, making it very topical, is we're incorporating the acquisition into our business process, into our strategic planning process. And the acquisition, as soon as we started to digest it, we started looking towards the remainder of 2021 and into 22. We created specific projects that the joint company is coming together with, and there was new products in the sense of integrations and consolidation of these two product lines, and creating a new product in having joint offerings together. Getting those projects written, getting them aligned to the initiatives and our corporate strategic objectives was something that we started doing right off the bat. And that process started immediately. And there was a big cultural component and a team building component that was necessary, because it wasn't about one company or another. And now it became about how we integrate our different offices. And we had an office in Toronto. We have an office in Toronto, an office in San Diego. Now we have an office in New York. And rather than talking about it as this company, it was, okay, we need to get integration going from a business perspective, from a technology perspective. And the new products that we are creating together were created. We looked at the projects. We understood what the value of those projects were together. The revenue teams and the product teams came together to say, this is what our revenue expectations are. And we evaluated them, we put them on a prioritization list, and we use, making this very personal, we use the RICE model, where we look at the allocation, the revenue expectations, and how long it's going to take to develop. And we prioritize across the board. So right out of the gate, we wanted to do this with new products as well as the acquired company, but it should happen immediately.
Right. And I think that you're spot on, Perry. And I think it's interesting when it's done well, this is probably thought about even at the time or before you acquire a company, where there are a few common goals. You acquire a company because technology, you acquire a company because the people, you acquire a company because the complementary market and so on. So that all be taken into consideration of how they will be integrated into the current product portfolio. And I think that, when you do strategic planning, you do have that sort of thought process on how they are layered on top of or complementary separate with our current roadmaps and the strategy. And then you kind of go from there, define a path forward. So.
Okay, and we've gotten a couple questions around resources, so I'll group them together. Anna asked, what resources would you recommend to learn more about best practices of strategic planning? And then Sean asked, could you recommend a few books that you think are most pertinent to today's talk?
Becky, you want to start us off?
It's hard to think about. I think that I have a couple books I think is really good around resources around product and portfolio management, around leadership. So one of them I really like a lot is Empowered, because not only just talking about individual product management, really talking about product leadership, running product organization. So Empowered, it will be one of them by Marty Kagan. We also at Dragonboat run some of the training around responsive product portfolio management, really taking a thing where we do on the sort of through experience on how you can run it on a practical level. So these are the things I can think of. If I came up with other things, we're definitely happy to share a post note.
Yeah, I think that obviously product management, product managers, product marketing managers, and then as you go up the organization, I do think it's really critical for the C-suite and the executives within the firm to understand the objectives of strategic planning. I think that the Peter Principle, a lot of times people might rise up within an organization and not have the appreciation for the value of strategic planning. And I think that, as we talked about, it's not only strategic planning for your largest customer or your largest companies, but also the thought process and critical nature of the strategic thinking around strategic planning is critical for small startups as well, to make sure your resources are allocated properly. I think two books that kind of come to mind from our discussion, believe it or not, Crossing the Chasm by Jeffrey Moore. We talked about creating new business lines or why it's important. And from a competitive perspective, you can't just look at the big 100-pound gorilla in your market. What's coming up that you're not looking at? So it's a classic, but it definitely resonates. The other thing, Value Proposition by Design by Alan Smith, I think is critical to have the right value propositions in mind and understanding your customer and the customer-centric view of strategic thinking and the competitive landscape is critical. So as you think about the value proposition that you're trying to achieve by a project or by a business unit, helps people get in the right mindset.
Cool. That's awesome. Two awesome books. Awesome.
And I will share those books as well as a few others that are on our reading list and some additional resources with everybody after this webinar. We've got a few minutes left. I'd love to spend a little bit of time talking about the how. So we kind of talked conceptually, we talked a lot about alignment, who to bring into the process, how to get everybody focused on the same goals and objectives. Can we spend a few minutes talking about how a tool can help facilitate this and maybe kind of give a little plug for Dragonboat here and the way in which we can fit into the strategic planning process?
Perry, you've been using it.
What do you think?
Probably the best coming from you.
Yeah, no, I was going to say I'll definitely jump in here. So when I came to AbacusNext, I immediately tried to get my arms around where are we at today, and there was a lot of spreadsheets involved, a lot of looking at our resource allocation and our resources, starting from our resources, where are they going? And there was some apprehension, obviously, in doing this for many different ways. And I crunched a lot of numbers in a lot of spreadsheets. And it was difficult because every time I wanted to change something, I had to pivot something slightly differently. And the great thing, when I got introduced to Becky and I started using Dragonboat for all of R&D, we were able to, better plan our development process. So working with the engineering managers and the product managers from a bottoms-up perspective. But then also from my executive leadership team, we started looking from a top-down perspective of what are we trying to achieve? What are we trying to go? What are the major initiatives and projects that we need to do? And then now being able to tie the resources to the features all the way up through the core OKRs and business objectives is critical. And lastly, I've tied Dragonboat into Jira. So everything flows. We start from Dragonboat and not only are able to go up into the OKRs of the business, but also down into Jira to make sure that what we're doing, how we're achieving, and the status of where we're going to achieve the business objectives on a quarterly basis really pop off the charts from a reporting perspective. And I could have a good conversation with the executives with a known understanding of the data.
Yeah, it's awesome to hear, Perry. I think that a couple of things you mentioned has been really I personally experienced from company to company as well, meaning that the strategic conversation happened in somewhere else. Then the delivery, the execution happening somewhere else. There's a lot of stuff going on in between that just get lost in either spreadsheet, or people don't really quite to have a way to say top down. Top down is not like micromanaging, right? Top down is to create, these are our goals, our strategies. Here's how we're going to go about doing that. If we don't allow team to have that visibility, they don't know the why. So the top down is built in Dragonboat, so the team can actually see, here are our strategic focus that meant to tie to these goals. Here's the resource allocation we plan out early on. So then we can use that to help us to prioritize what the product can work at the second level of details. And then by connecting different views, like you mentioned, Perry, in that sometimes I need to look at it by OKRs because that's a business objective. Sometimes I need to look at team, what the team's working on, how they contribute to different OKRs. Sometimes I need to look at certain time. It's like this quarter versus 3 months from 6 months from now. So having the ability to tie things together in one system is super important for the right decision making at all levels. And that's where a tool like a Dragonboat really helps, is to tie all the pieces together so you can make a decision not just at the one perspective, across different team, across different perspective, and you can just. One thing I really want to highlight is that there's kind of taboo in some ways. People don't want to talk about resources. They feel like, hey, it's just like, like us, we don't want to talk about money, right? But doesn't mean it's not critical. So if you have a strategy, you have goals, there's no resource backed about it, it's not going to happen. So it is something we need to have a healthy attitude towards it. You don't micromanaging it, but you do have to have an idea of where we spend it and how we plan to spend it, just like our money, right? Our own personal financial. Nobody want to talk about money, but we do. It's something we just have to live with it. So that's something that, I'm very excited that, Perry, that you see the value and be able to adopt it. And then we are also heard a lot from our customers as well, how this tie things together.
Wonderful. Okay, we've got a couple minutes left. Any parting thoughts, any advice for the audience before we let them go?
The only thing that I'd say is one of the things that we've been able to do at AbacusNext by changing our focus and looking at the OKRs is we've been able to grow our product team. And I have tons of global product roles open because we've changed our strategic mindset to really focus on where growth lies and focus the product organization, the engineering organization, product development to focus on those growth objectives. And we're seeing that in our business and we're seeing the results. And part of it is the help of Becky and Dragonboat to be able to make that happen. And because of that, I think that we're growing in ways that we were just hoping during our strategic planning process. It was great.
Awesome, Perry. And congratulations for a growing team. I know you're really making a great name in the space for the legal accounting firm. And I know that when product managers are being empowered to drive business, not just writing tickets and working in a engineering scrum only. I mean, it's a part of that. And that's really fulfilling a career. So highly recommend to, if you're interested in growing a career and working with Perry, and reach out, here's the contact.